Testing, testing, testing. JB here. Hope everyone's doing outstanding. October 3rd, 2023. I'm just going to talk really quick. Most of the stuff I talked about yesterday, so you can listen to the rant. It's on the website, or I can post a link here. But just going to give a quick update. A couple trades today. I'm actually looking at a couple others, but I'll probably just sit on my hands. At some point, we'll have some reversal here. But take a look at the market. The S&P was actually in the green overnight. Seemed like we are going to have some type of relief rally. Gold was in the green. And then as we started getting closer to the bell, market was kind of chopping around, up and down, but small caps were still falling. And then we had the JOLTS report come out at 10 o'clock. And similar to what happened in August, so July, the JOLTS report came in better than expected. Markets got destroyed. And then in August, at the end of August, we had the similar reverse reaction. So JOLTS report came in worse than expected, meaning there are, hang on a second, I'm just trying to, there were less jobs out there. So the job of the Fed right now, I mean, I keep saying I hate to say this, but they're trying to induce somewhat of a recession or at least higher unemployment, things like that. But when there's more jobs out there and the unemployment rate remains low, it's just not conducive to the Fed standing pat in November and December. So markets sold off right at 10 o'clock, and then it just pretty much, I wouldn't call it a bloodbath just yet, but the SPY is down over nearly 1.5%. Same with the small caps. I still think 415, 416. I've been saying it for the last couple of weeks. I think that's kind of a starting point for the SPY. I look at the SPY as the index. It's just easier liquidity, so on and so forth. But I think if we get there and we can find some kind of support, maybe we chop around there, then maybe we can have a little bottom into earnings next week. Banks kick off earnings. You also have Domino's Pizza. I didn't realize that they report in 2 weeks. So they report on in 1 week, excuse me, next Thursday, October 12th. So I think that could provide some kind of, at least some support for the markets as I think estimates have come down. People are expecting possibly a bad quarter for earnings. I think the previous quarter was great. The one before that was not so good in Q1. So that's kind of what I'm looking at. So a couple things, and first I'll start off with what I posted on the watch list this morning, and it's kind of an easy a thing to look at. Obviously, some of these companies that have been accustomed to this low rate environment for the last decade, where these corporations can raise debt at extremely low interest rates, some almost near zero, and Apple's done that a couple times. And then what they do is they use their leverage to then appease the shareholders via stock buybacks, dividends, things like that. And then there's a lot of offenders out there, and you take a look at and I hate to, I've had a bearish spin on these before, so I hate to do it because they're up quite a bit already since I was negative on, and this is a long time ago. But you take a look at companies like AutoZone and O'Reilly. Both have, I think AutoZone might have $8 billion in debt, somewhere in there. They do like $16 billion in revenue on a yearly basis. So even if they were at a 50% margin rate, and that's you take out all the costs and stuff, they won't be able to pay back the debt in a year, let alone many years. But they are growing, they're profitable. So I think people look at that and they kind of dismiss the debt because it's at low rates. But when the bill comes due, and for example, and that's why I looked at Domino's Pizza, Domino's has nearly $2 billion of debt the principal has to be paid by 2025. And that's $2 billion of their $5 billion. By 2030, the $5 billion is all due. And what Domino's Pizza has done in the past, and UPB has talked about this quite some time, that they just kick the can down the road. And if you look at their 8K filings, their 10Q, they actually have a statement of all their debt via an 8K. Just crazy. They kicked the can down the road in 2015, 2017, 2018, 2019, 2021, meaning the existing debt they have has already been recapitalized for further out dates. And probably, since the low rate environment has been around since at least 2015, they've probably taken some of that debt that was at higher rates and was able to kick the can down the road at lower rates. But now they're in a situation where we're not in a low rate environment anymore. To try and kick the can down the road on a potential $2 billion in debt payments that are due by 2025, it's going to come at a lot higher cost. And it already cost them $50 million a year just to it's a quarter, just to finance the debt they already have. So that's $200 million a year just to interest payments to service the debt. What does that look like at 6-7% as opposed? I think their rate's 3 point something. I think they've got it down to that. So is that baked into the market right now with Domino's? And Domino's had that big spike when they announced that they were finally throwing in the towel and they're gonna use the aggregators, the Uber. I think it's just Uber right now. So you saw that big gap up. So it's giving back some of those gains. I wish I could get some puts before earnings. And I was looking at I think it was 325s. They were $1.20. I don't even want to look what they are now because they're probably up quite a bit from now where they were. Let's see what next week's. I was looking at next week's 325s, or maybe it was the 20th. Yeah, 135 by 180. I think I was looking at, and they were 125 by 145. Anyway, well, needless to say, so I went and got this week's because the premiums on the positions starting next week, because they have earnings, are through the roof. The implied move on Domino's next week is $27. So if you take a look at the contracts for next week, 27, and it's at 366. I mean, it's a 7.3% implied move. I think last earnings got destroyed. So, and I think that was back, I think it was May, right? So, that's kind of the thought process there. That you look at AutoZone and O'Reilly, similar setup in regards to their debt. And I didn't look at the individual. I didn't dig deep to find exactly when the debt is coming up due. How, are they going to need to kick the can now? But the strikes on AutoZone and O'Reilly makes it very difficult to find a decent risk reward setup. I think it's like O'Reilly only has monthly contracts, and then you look at AutoZone, and even the 2,300 puts are insanely expensive. So the risk reward doesn't really jive unless you think there's going to be a much larger move to the downside. And you look at the charts, Domino's, for example, has been stuck pretty much between 375 and 400 since August. So it's finally breaking out of that trend, some churn, and now you look and we have a big candle on the downside. There's no real catalyst. I mean, the market, small caps have been getting hit. S&P was getting hit, and Domino's kind of been hanging in there, alternating gains and losses. And now you have this candle down nearly 2.5% today. Actually, it's 3.6%. Why is this not updating on my chart today? Oh, there it is. Whoops. Yeah, 3.6. The candle looks a little better now that I updated. I'll erase that chart. But I think there's more downside. I think maybe it gets into the low 350s this week as people start to look for ways to be able to take advantage of this higher for longer environment that it looks like we're going to be in. So now you start looking at some of these other names that have these, that are high leveraged in regards to their debt. So there'll be more on the way with that. And I'll try and probably see if I can find some more names that are going to be in a situation where, similar to what the U.S. government was. I forget. The U.S. government pays more service to service their debt now than they do on the military, which is crazy. But arguments for other days, or rants for other days. So that's the thought process there. We'll see what happens. If we do get a bounce, maybe it bounced with the market. But as long as it stays under 370, I think it goes into the 350s this week. And if some of the premiums come out of the strikes past October, past this week, if next week start to premiums come out a little bit, I'll look to get maybe some strikes play for premium bill because they don't report earnings till next Thursday, so there's some time there. So that's Domino's. That's kind of the debt story. So you kind of wrap your head around why, or at least figure out why I went and got those puts there today. I closed the last of my IWM puts this morning. It's one of those situations where it came back. IWM puts came back from the dead. And I didn't want to be in a situation where we get some kind of bounce and I'm going to watch it go from green to red again. So I was looking at TZA calls. I'll probably look for some later dated strikes on TZA, maybe some 40 October 20s. I think that might be a better way to play because it's a 2-time ETF. So if we do get a bigger downside move, once it starts going 35, then it'll start moving in $3, $4, and $5 increments. So I'll probably look for TZA if things get a little crazier here. And then take a look at the SPY. 415, 416 is a stone throw away now. So I think, and typically what you see in some of these, especially when we have some bigger sell-offs, is you see some kind of flush out. Some, they call it the capitulation. People just throwing the towel on the buy side. Sellers come in, we get a big move to the downside, and then all of a sudden a magical hand comes in, and then that's the bottom. I don't think we've seen any capitulation just yet, so we're going to need some kind of flush out. So maybe we close at 420 here this today, and SPY just hit new lows, and then we get some kind of capitulation at some point. I would hope before earnings start next week. So that's the rant on ULTA, IWM. Oh, not ULTA. ULTA and LULU's next, right? So LULU finally under 370 today. The irony here is there's no news or catalyst, right? You take a look at LULU, has been the most frustrating stock the last couple of weeks, trying to play it on the downside because every time it broke that 50-day, I thought that was it. And then what does it do? The next day it moves back above it, then it goes back underneath, went back above it on Friday, and now back under that 50-day moving average today. 50 days at 382.73. I think it closed right at 383 yesterday, and now it's down 4% as right now. Again, I think it goes under. I thought 360. Maybe it's going to go down. The 50-day moving average is at 353.03. Does it get there in the next couple days? I don't know. Maybe. Everybody was talking about the government shutdown. Now everybody's talking about the student loan payments coming online. What does the customer base look like at LULU for? What's the demographic, the segments who are the big customers at LULU? Is it folks who have student loans, and that's going to impact revenues and sales? Who knows? Does someone give up their Starbucks so they can buy some yoga pants, or vice versa? I don't know, but it's just funny how that all works. We've had some weak sessions for the S&P and small caps, and LULU holds on. And actually, some of the times we've had some sell-offs, LULU's actually green, and then finally today, for some reason, it decides it's going to sell off 4% on no news or catalyst that I can see of, or that I can see out there. So hopefully it pulls down into low 360s. Similar to what happened to the IWM puts, my LULU puts are back in the green. So, I might be quick to pull the trigger if it starts to bounce back over 370, salvage the puts that at one point were not doing well, and then revisit maybe later this week if it, depending on where it bounces. But what a frustrating stock that one has been. There's O'Reilly hitting lows. What else did I have on here? Oh, gold all the way down to 1830 overnight. I think it was 1838 in the evening time. Then 1830 right at 11:30, bounced all the way up to 11:49 and change, and now down here at 1837. It's funny how it all works, because this morning you start reading all the headlines. I go to all the normal FinTwit and financial websites that I normally read my stuff in the morning, and now you start seeing people talk about gold. And now all of a sudden, after it just hit almost near record highs a couple months ago, now everybody's, oh wow, there could be more downside, stronger U.S. dollar, yields, right? As yields go up, gold becomes less attractive because there's more safe haven assets you can put your money in that have a yield, where gold does not have a yield. And now we also have the death cross, which is when the 50-day crosses the 200-day moving average. It's not even that close yet, but it's getting there. So there was a piece, I think that was on Market Watch, where here comes the death cross on gold, and the that impends more downside. And someone else, there was another piece. If yields get over 5%, gold's going under $1,800. I think gravity is just going to take it, and I think it's going to go. 1820 is the next stop. So if it holds 1820, maybe that's it for my bear case on gold for now, and I'll just lock the rest of my Novembers in, lock the J dust in, not look for a position, and revisit. If it breaks 1820, and probably happen overnight, if it does, I'll probably continue to look for more positions to play for even a larger move. And 1824 would make gold flat for the year. So I think that would be a key spot when people start seeing red year to date. Maybe might be a problem, similar to what happened to IWM. Small caps closed red on the year yesterday, and here we are. There's more follow through to the downside. So I think that's it. I'm trying to think of other things. Still have some ULTA, just a couple. I sold most of them. The 385s, those are back in the green when it hit 393. Still think that heads into the low 380s. I might, depending on what the prices look like, I might look to get some strikes for next week on ULTA. That one has traded a little more favorably. Hasn't been as frustrating as LULU. And I think that's it, folks. So hopefully, I'm one of those. I'm a positive person. I don't. It's not my favorite thing to trade for downside, but sometimes, especially when there's bigger moves, you can make more on downside in a couple days than you can do on the call side over a couple weeks. It's just how it works. So I'm certainly not going to be in a position where I get caught with my pants down. The market, continues to sell off, and I'm not in puts anymore, and I'm all in calls. But at some point, I'll start looking for some bounces. I take a look at Netflix this morning. Just crazy. So Netflix it's a funny story because when they go and start raising prices over the last couple of years, you would have all the bears, and there used to be a ton of bears on Netflix. There's not that many anymore, if at all, because the Wedbush analyst finally changed his tone on Netflix. But they thought once Netflix started raising prices, they were going to lose customers. And then once they saw, wow, they're not losing customers, the stock went up. And then I think they raised it again. And now finally they raised prices, or there's a rumor, a Wall Street Journal came out with a report that they're going to raise prices. Stock gap ran right up to, I think it was 390, and it's gave back all those gains. So maybe now folks are probably saying, well, this could be the tipping point for Netflix, where people are going to start leaving as on this next price hike, which is certainly possible. And Netflix is going to rationalize this by saying that they're the only a la carte service not to raise prices in over a year. just because someone else does it doesn't mean you need to do it. Is just my opinion. But I guess if you're in the same competitive landscape and you have a balance sheet to go after and profits and have to create content to keep people subscribing to your service, I guess raising prices, if that's going to continue to help them excel, I guess that makes sense. But I was looking right after that spike, the news, the premiums went nuts. So I was looking at 395s, 400s, and then thankfully I didn't add anything, because otherwise you're looking at getting a pretty quick haircut and it ruins your day. Similar thing with Roku, all the way up to 71. It seems like clockwork. Every day runs up in the morning green and then just gives all the gains back down here at 69. At some point, it's going to find a bid, not sell off, rally 15, 20% in a couple day time frame, but still waiting for that to happen. All right, folks, I think that's it. I'll try and get on audio later. Let's have a great day. Rock and roll.